Conrad, thank you for coming on the pod. It's great to have you on.
It's great to be here.
We always like to start with a journey question. So, obviously, you started in traditional banking, founded funding options, then now at Allica Bank. So, yeah, would love to hear a bit about that.
Yeah, I mean, I'll start by going even slightly back from there, right? Because I think a lot of founders had a kind of very clear drive and vision from a very early age, right? You often hear the story about someone who had a lemonade stand when they were 12 years old.
That was
type
me.
Stuff. There you go. Well, I wasn't one of those. That's the key point. So I was one of those people who kind of stumbled out of university into the lights without a particular plan. Luckily, I've been to a fairly prestigious university, so it didn't matter that much. But I didn't have a kind of clear career plan. So my getting into banking, which you just alluded to, was by accident, not design. So long story short, I spent most of my early 20s, or in fact a large chunk of my 20s, traveling around the world. And then I got sat down by a fierce auntie when I was in my late 20s, and she said, I need to get a qualification. And the only way I could get a qualification and get paid reasonably well was go into investment banking, where I spent a few years qualified as an accountant. That was my journey into banking. There was no particular plan, albeit I don't regret it in retrospect. I think banking is financial services is a good industry to get into. I spent probably about 10 years or so in banking in various roles. I'd say the most interesting role was in corporate strategy in one of the big banks. That's a really interesting thing to do if you get a chance. And then I had what I call my midlife crisis. Mm-hmm. So my founder journey, rather than being kind of like some vision I'd had when I was in my teenagers years, the reality is I was kind of like, this was kind of the wake up moment where I was like, I didn't set out with a plan, but there's no way I would have planned to be in a corporate job for the rest of my life, sitting out and waiting to get my pension. So I always call funding options my midlife crisis, and that's only a half joke, right? I decided to found a startup, have a go. Funding Options is one of the earlier London fintechs, right? So it's quite hard to believe now, but you cast your mind back then, there was literally a few hundred startups clustered around the famous Silicon Roundabout.
And just remind us, when was this?
This was, I guess startups have multiple birth dates, but let's call it 2012 was when I started spending serious time at the weekends, for example, on Funding Options. So that was pretty early. In fact, the word fintech was pretty new then, right? It was kind of came out of nowhere. I decided really I wanted to start a startup. I looked at a few options, but all of them were in the domain of SME lending, which is where Funding Options played. So I kind of thought that was an interesting space, and it's one where I had some experience and expertise, albeit I have to say I massively overestimated my expertise when I took that plunge. Albeit I'd like to think now I can know quite a lot about SME lending, but I didn't know quite as much as I thought I did then.
Okay, and you mentioned that there are a few options, but they're all in SME lending. Yeah. So was that experience-based, or because you had a passion for it? Was there ever anything else you may have done? Or
I think passion would be an overstatement. I've kind of fallen in love with the SME segment generally over the last 15 years. But I think it would be false for me to claim that I was passionate about the segment at that point in time. It's almost like a bit like an arranged marriage, right? Kind of the love has grown over time. I actually really love the segment. I'm very happy I ended up in the SME segment. But no, it wasn't driven by any particular burning passion. I mean, a lot of people in my space of SME that one of their parents was a small business owner and they saw the pain, right? That wasn't the case for me. Really two dimensions. So the first one is the market side. So I said that I spent time in corporate strategy, and I am pretty good at the classic market sizing and all that stuff, right? I have that skill set to a T. The important thing to remember is that was the aftermath of the global financial crisis. So there's a lot said about lending to SMEs in this country, and a lot of it is hearsay, and a lot of it's not really true. But back then it was true. So what happened was the incumbent banks famously had pretty much gone into bankruptcy. What do banks do when they're in trouble? They hoard cash. They don't lend it. So lending to SMEs had dropped off a cliff. It was a really dysfunctional moment in time, actually, because the big banks, because it was politically toxic to admit the truth, were kind of going in front of Parliament and saying things that weren't true, right? To kind of try and get the press and Parliament off their backs. But the reality is, empirically, SME lending dropped off a cliff. So there was a big market gap that had emerged. So that was kind of the strategy side of my thinking. And the personal one was actually, I'd actually spent some time in the SME segment in my banking career. in a very nascent fintech place as well. A small fintech company that had begun to pioneer extracting data from accounting software, which is now a sort of key part of the thesis of digital lending to SMEs. So I also had a bit of skill set, albeit I think as I said before, I think my understanding of the SME lending segment, because it's just so extraordinarily diverse. So yeah, big market opportunity, real point in time, which I think is massively. You've got to have high conviction. There's a moment in time that's going to give you a tailwind, and there was a very clear moment in time, and I thought I had quite a lot of affinity to the segment and understanding the segment. Those were the two things. So really, the question I faced strategically was: do I go in as a lender? Do I go in as a software provider, or do I go as a comparison site or aggregator? That was the choice, and I came close to trying to build a lender. There were many great digital lenders came about at that time. Korea, which Funding Circle, iWalker, some really good fintechs. And there's a funny subtext there that Korea, Allica recently bought. So yeah, there's been a
full circle.
That was a story.
No,
it's a 15-year story arc, that one. So there are lots of lenders going in there. Peer-to-peer lending was very fashionable in the early days of fintech. But I decided what the market needed was an aggregator. So in other words, I thought there was quite a lot of supply from these new digital lenders, but also some traditional specialist lenders. The problem is the SMEs and the lenders couldn't find each other cost effectively. So that felt like a comparison problem. And this, of course, was in a period when the likes of Money Supermarket, the comparison sites, had come to dominate consumer financial services. So I thought it's just a matter of time. So the world needs an aggregator. So I decided to build that.
And that switch from corporate to startup, how did you find that? Did you do that quite quickly?
I mean, bluntly, I did a terrible job of it. It's absurd in retrospect, but I didn't even read the Lean Startup, right? And the Lean Startup wasn't quite the holy book it is these days, right? But it's certainly around, and I'm sure many people told me to read it. If they didn't, then they should feel ashamed. But yeah, I mean, the thing about going from a corporate is that you've learned how to drive a super tanker. These, enormously powerful machines that large corporates are, with enormous momentum. And there's a particular set of skills when you think about strategy, for example. Let's say the objective is grow revenues 20% that year, which is very toppy for the average corporate. Then you'll typically come up with a list of, say, half a dozen levers, which can each deliver 5% growth. So price upwards is a classic lever, value segmentation of your customers. So there's a few classic levers. You'll typically come up with half a dozen, and that's about what you can do. You can pull half a dozen levers, and as long as 2/3 of them work, which is a reasonably good bet, then you're going to get your 20% growth. So it's a quite methodical and scientific way of basically pulling some levers on the deck of these enormous super tankers. That is a terrible way to run an early stage startup, right? And I took that skill set. And I remember thinking, right, kind of like, I know all these youngsters in hoodies are doing things differently, right? But the reality is I've got a corporate strategy background, so I know what I'm going to do. I'm going to do some desktop research and figure out the levers to pull, right? And guess what? That just doesn't work. So I was a pretty poor CEO founder for the first couple of years, funding options. I was super lucky that just as I was running out of my patience and cash from my investors, my early investors, that was kind of the peak of the alt-fi bubble, and I was in alt-fi. So fintechs come in many waves, but the first wave, I'd say, was alt-fi, and that was where I was. So just as I frankly didn't deserve any more patience or money, was when I actually got a decent slug of money, because it was quite the toppy and frothy in the market. The good news is, by that point, I had figured out A, how to run a startup, and B, I had discovered product market fit. So there was a little bit of luck, which is timing-wise, I got what was for me then a big chunk of cash, a couple of £1 million, because I was a pretty lean business. I've always been very lean. And that gave me the kind of window of a year or so to build a proper company. And then, then we got into scaling mode, and I was actually better at scaling than I was at starting up, because scaling, you begin to actually have some levers to pull, right? So you begin to sort of very scientifically pick off one by one the remaining big problems in the business, rather than sort of running around in circles. So yeah, so that was a story. I was a pretty poor CEO founder in the early years, to some extent self-inflicted. But by the end, I think I was a pretty good CEO, actually.
What did you figure out in that early period where, okay, pulling levers is not working here, I need to go about it a completely different way? What approach did you take to become a better
Um,
founder?
the reality is, rather than actually a fundamental change, 18 months, 2 years in, the kind of the traditional way kind of catches up, right? In other words, I think the right way to put it is I probably could have achieved where I was 2 years in the founder I am now, after 6 months. So in other words, half the costs and half the time. I just think in the end, right, time catches up. You get to the product market fit slower, but you get there anyway.
So you could have moved quicker.
Because the market opportunity was very, very real. And a kind of thesis that there was a need for a aggregator in the space was blindingly obvious. In other words, there was nothing fundamentally wrong with the thesis in the market. It was just I wasn't fast enough and agile enough in getting to the right answer. If you want specificity around what the answer turned out to be, there was a couple of absolutely crucial things. And I wasn't the only player doing what I was doing, by the way. So we did unequivocally win. So, by the time I left, we were as big as everyone else combined doing the same thing as us. So we did win. It's not like it was that bad, right? But two fundamental things that we got to slower than we should have. The first one was I was fixated on I was going to build a comparison site, right? Because that's the dominant form in consumer comparison. Was a comparison site do it basically says, well, look, we've got you 10 offers, pick the one that's cheapest. Yeah, that was not the problem to solve in SME lending. The problem to solve in SME lending was even before they got comparison, they needed to find the right product. It was a product discovery problem. There are literally dozens of ways to finance your business and literally hundreds of providers in the UK alone. So the real problem was product discovery. So to use the consumer financial services analogy, if I go and search for travel insurance from the week in Alicante I've just come back from, I'm healthy, I'm reasonable age, I'm going to a very generic location in Europe. Guess what? It's easy. It's a price comparison problem. Let's say I was 80 years old and I wanted to go to my long lost cousin in Azerbaijan and I had some serious health issues, right? You're not going to go to a comparison site because the problem you want to solve is who's going to give me insurance, not how much. So figuring out product discovery was crucial. And then secondly, figuring out that although the majority of the customers we had coming through we were able to service purely digital, that kind of price comparison vision. The reality is the vast majority of revenue and value was coming from a relatively small number of larger SMEs, and they wanted and needed a concierge type service. So I was much quicker than my competitors and peers to facing the hard fact we needed to have human beings involved. What's now fashionably called high tech, high touch. And actually that learning, by the way, you can see that deep in the DNA of Allica Bank. So that's one you don't forget.
I like that high tech, high touch. It's a nice segue into Allica Bank. Yep. But maybe before we do that, just rounding off the story, you said you were as big as the others combined. So where did it end? What actually happened?
So I left the business in 2019. So if you want to place that in your mind, that's about 6 months before COVID hit. That was when we were reading these little tiny articles, 10 pages into the newspaper about this thing in China.
Yeah.
So I happened to leave about 6 months before.
Timing?
Yeah, because the business was devastated by COVID, right? Because the government effectively nationalised the industry of SME lending. The government had no choice. A new CEO had taken over from me. I'd left the business, pretty much fully left the business. I thought, when it's time when you go, you've got to go. You don't hang around like a bad smell, because the new person has to have a clear mandate, and you're talismanic as a founder, particularly a single founder as I was. So I'd moved on, which, by the way, was an enormous relief.
Were you ready to go at that point?
100%. I was ready to go a couple of years before, but the reality is you can't just walk off the pitch, right? It needs to be a measured thing.
Did the acquisition come a couple of years before, or did it?
After,
okay.
Yeah. So the CEO took over from me. He's still running the business, by the way, a guy called Simon. He had to take it through COVID, which was, we're talking about a business with multi-million revenues going down to essentially zero revenues. So that first lockdown, where we were all bashing pans here in the UK to celebrate the NHS, literally quarter before, millions of revenue. This quarter, effectively zero.
Wow.
It was an extremely tough challenge. He did a very good job. Anyway, long story short, rebuilt the business post-COVID, and then it was acquired by Tide, the fintech unicorn, who now own it. And it's doing super well, by the way. So I follow the company on Company's House. It's highly profitable. So yeah, I was always right about the thesis.
Yeah,
right?
yeah.
I'm proud to say that, I mean, the businesses, although they effectively got reset to zero after I left, is now in revenue terms pretty much twice as big as when I left. So I'm really proud of the legacy, actually.
Yeah, amazing.
Yeah.
And now, well, there was a bit of time between that, I guess, and Allica Bank. So what did you spend time doing before?
Yeah, I took a year off, basically.
Okay.
I didn't completely take it off. I spent a few months advising Anne Bowden at Starling,
Okay.
which was when she was at Starling, which was really enjoyed, actually. Really, really interesting, actually. And it was a great company. I was also advising a couple of other well-known fintechs, Iwaka being one. I know the founder fairly well.
Okay.
So yeah, I was dabbling for a year, basically. Largely speaking, taking time off, walking the dog a lot.
Travel? Going back to the travel days?
Not really, no, because that was COVID, right? So, I live outside London these days, and I downloaded the Ordnance Survey app on my phone. And I must have walked every path in Hampshire. I loved it, actually, I will say. So yeah, I mean, I needed that time off, right? I needed to rebuild my sanity, frankly. When you're running a startup, you're not allowed to talk, we're all meant to be saying how you're killing it and stuff. The reality is, vast majority of startup founders, it's a constant battle just to stay alive, right? You're just always feeling like you're drowning. So, and it's you're only as good as the next fundraise, right? And your runway. So, it's a horrible experience at times being a startup founder. The highs are much higher, but the lows, believe you me, are a lot lower. And unfortunately, you can't really talk about that when you're running the thing, but I can now. So yeah, I needed some time off, kind of rebuilt, and the nice segue to my current role at Allica Bank. So our CEO Richard, he and I go back a long way. We'd actually met in the corporate strategy team at one of the big banks many years ago, and we both kind of accidentally stumbled into fintech really early. So I founded Funding Options. He was the original CEO of Oak North Bank.
Oh yeah.
Yeah, he was the one that got them a bank license. So that was one of the very early fintech moves. So yeah, we just kind of stumbled into fintech a few years after we'd worked together. And then he had a stellar fintech career. So if you look at the unicorns he's already been involved in, you've got Oak North Bank. He was number 2 at Revolut. He's on the board of World Remit, Zeps. So he's got a stellar fintech heritage. But crucially, he didn't just spend those years in fintech. He was also working in senior roles in major banks. So I would make the observation that the art of fintech is balancing the fin and the tech. And far too many fintechs are too much the tech and not the fin. And in the end, that will always bite you. It's just a matter of time. You can raise money from investors who don't get it, who are naive, but in the end, it always comes back to bite you. But he had that kind of like very rare DNA of fin and tech in equal balance. So yeah, long story short, he was number 2 at Revolut at the time that I was having my year off, and he took the role of building Allica. And reached out to me very shortly afterwards and said, "Look, it'd be good to have someone who's got your breadth." I think was his word. So I think someone who was looking for someone who actually, because I've been a CEO, have enough. I can do most C-suite roles if necessary, albeit not to a bank level. I thought that was an interesting thing to get involved in, and I decided I didn't want to found another business at that time. So it was kind of perfect timing.
Mm-hmm. And you still want to be involved in startups?
Yeah, well, it doesn't have to be startup. I like growing stuff. Right? I kind of don't see the point in doing a role where it's either a managed retreat, as it is, frankly, in most of the big incumbent banks at the moment, or frankly, where you're not trying to achieve something great, right? There's something slightly restless about me. I don't want to be doing stuff where I'm trying to dent the universe a little bit. So I knew Richard would be a great CEO. Didn't realise how good he would be, actually. That sounds a bit crawly, but it's true. He's turned out to be exceptional, actually, I've got to say. But I knew he'd be a great one. I thought that sounds like a nice adventure. and very strongly believe in the thesis behind Allica. A lot of what I'd learned the hard way is deeply in the DNA of Allica, and we've obviously been very successful since.
I think that's again a nice point to make, is the sort of shared problems, I guess, throughout your careers. Allica is sort of solving part of them in the sense of the SME banking. So maybe talk to me a little bit about that problem Allica is solving, how they're solving it.
Yeah, so we are very focused on established SMEs. So this is the larger SMEs. So why is it important I make that point? There's been tons of fintech innovation in the micro business segment. So this would be true of the vast majority of developed economies, but using the UK example, there's about 5 million businesses in the SMEs in the UK. 90% of them are micro businesses. They are really, really tiny. Only 500,000 or perhaps 750,000 are consequential SMEs of any size at all. Now, those micro businesses, although they're massively more numerous, 85-90% of the population, each of them is individually so small, collectively they're quite a small part of the economy. So they're only about 10% of the economy. And crucially, in financial services terms, they're very similar to consumers. So their banking needs are really simple. My favourite example there is by far the most popular form of funding for an SME in the UK is a personal credit card. Because if you're a tiny business, let's say with 100 grand a year newsagent, you need 5 grand to go and buy some stock. Are you going to go and put a suit on and do a bank loan application? No, of course you're not. You're just going to use your personal credit card. So 1.5 million businesses in the UK use a personal credit card to fund their business. So those micro businesses, it's a small part of the economy and they're pretty well served by consumer banking type offering. Now, our segment is different. Firstly, it's much bigger. It's about a third of the economy. But crucially, they are not at all like consumers, and they're really awkward for the big banks. So for the big banks, they really have two major ways of making money. They have the mass market segment, which is consumers, people like you and me, plus micro businesses, which are really can be served on the same infrastructure and operating model. And then they have corporates, so the Vodafones of this world who get the... So the mass market segment is digital first, self-service, high volume, simple, low value customers. Corporate banking is the polar opposite. There's a very few number of target clients, but they're extremely high value and they're extremely complex. And the way that the banks service those is what they call coverage, which is lots of high quality people in suits serving those customers. Mm-hmm. So those are the two major revenue centres of the incumbent banks. Our segment is really awkward for the big banks because our customers are too complex for the mass market, but they're too low value for corporate banking, which is people in suits. And for that reason, they get fundamentally unserved by the big banks. It kind of started, the first wave of that was immediately after the global financial crisis. As the banks pulled away from lending to those businesses, they never really came back. So the first wave was on lending. The second wave, which we're in at the moment, is on core banking activities. So the big banks have debanked, as they call it, about almost 200,000 of these SMEs in recent times, because they just can't be bothered to do stuff like anti-money laundering controls on them, and they can't be bothered with the complexity of the lending and the complexity of the customer. So what you've had over the last 15 years is basically these businesses, historically, they would have been okay because they would have had a relationship manager in the bank branch who would have basically papered over the cracks of the fact the systems and processes didn't fit the complex of the customer. With the branches and the people being got rid of, it's basically exposed this gaping wound, and these customers have become massively unhappy and massively underserved. So lending to SMEs, a gap has emerged about £65 billion in the UK, and it's our customer segment is where that gap exists. So yeah, big market gap, very low NPS, customer satisfaction, etc. That's the thing we targeted. So the thesis behind Allica, really, in a soundbite, is what if you built a bank from scratch that's able to deal with the, let's call it, mass complexity of our segment. So in other words, you build everything, your own infrastructure, technology, operating model, processes, people, everything around solving that problem for that 1/3 of the economy. You can build a big business with very high customer satisfaction. And we are officially the UK's fastest growing fintech ever, right? So it's worked, right? So we beat Revolut's historic number one position of revenue growth by a large
Pretty
margin.
quite sweet for Richard, that, given he was number 2.
I think that would be too churlish for Richard, but yeah. But I mean, clearly Revolut's a different league to all of us, but on that metric of revenue growth, we are preeminent. So yes, that's the thesis behind Allica. And one of the notable things, we mentioned high tech, high touch before. Our customers want a relationship manager. That's what the bank used to have and give them and took away. We brought that back. So what if the relationship manager is not in the branch? What if you don't need the branch? What if the relationship manager comes to you or your favorite coffee shop and has a grown-up conversation about your business using the power of digital? So that's the proposition of Allica, and it's clearly been very successful today.
And just again going on the high tech, high touch path. So when you're approaching products, okay, you've got the tech side, but then you also want that relationship manager. How do you approach actually building a product that serves that market in the way we've just discussed?
Yeah. So I mean, firstly, I know it's very fashionable, and for that reason it sounds a bit trite, but you do have to be able to deal with kind of the omni-channel challenge. So that what's happened with our customer base, with the incumbent banks as they've debranched and got rid of their people, is they've forced the customers into purely digital experience, which sounds like a great idea, but the digital isn't able to deal with the complexity of the customer. So the customers end up then dropping out of the digital experience and end up being bounced around a call center when they're trying to fix something, right? So and the banks are doing you can imagine what they do, because all of us, the chatbot pretending to be a human being. Yeah. It's like, please let me speak to a real person. Please because the chatbot can't solve the problem. It can't even conceive of the problem, let alone solve it. So you have to think about how to elegantly bring together the human and the digital channels. So we thought very hard about that. You have stuff like single customer view. You have to have stuff like your customer's address. It may be inevitable that there's multiple variants of that or copies of that address around your systems, but you have to be absolutely sure that one is the golden copy, and if that gets updated, everything else does. So thinking really hard about those problems around, we are a multi-product business. We offer current account savings and a variety of lending products. How to elegantly move from the online channels to telephony, for example, so that the customers, you can elegantly pick stuff up and the customer can move from one channel to another. Mm-hmm. So trying to architect for that is as much as possible from day one is crucial, because it's very hard to retrofit that kind of thing. So I'd say from a customer experience perspective, that's how we think about it. From a strategic perspective, perhaps more consequentially, in the end, there was one fundamental strategic bet at the heart of Allica. The incumbent banks had taken away the relationship banking aspects from their customers, not because the customers didn't want it, the customers definitely wanted it, because they couldn't make the economics work of these relationship managers. Now, the reason for that is because the relationship managers would spend all their time fixing errors and issues. So the customer had tried to update their address in one system, and there was still three other systems that they couldn't update. So the relationship manager would go around picking up the pieces and saying, I'll fix that for you. So the strategic bet at the heart of Allica was that these businesses, and our businesses are traditional businesses, right? They've been around a long time. But even though they're traditional businesses, they would choose to self-serve on the day-to-day banking activities if the digital is good enough. So why would you pick up the phone to make a payment when you can do it digitally? But that had to turn out to be true, because we couldn't have lots of people doing we couldn't have a situation where customers chose to do everything on the phone or demanded a coffee and a conversation to get anything day-to-day stuff right. But we had to get the digital to a point where the customers choose to self-serve, so that the only time a relationship managers would need to get involved is really two moments of truth. So the first one is when we drop the ball, right? We drop the ball like everyone else. You want to pick up the phone to somebody, you want them to own the problem and say, look, I'm going to deal with this, leave this with me, right? Not be bounced around the call center. And then the other one is, the more positive one is, you've got a really consequential decision. So my landlord's just told me I could buy the premises we've been leasing off him. Should I do that? Yeah. These are really consequential decisions. It's as consequential to that business as buying a house your first house to a person. So that's when you want a relationship manager to get involved. You want to speak to a human being, right? So that's kind of the high tech. Make the digital really compelling and potent, so that customers choose to be digitally native, but they always have the conviction and confidence they can pick up the phone or send an email whenever they want, and it'll get directly through to their named account manager. It's not going to be this spoof chatbot pretending to be a human.
And I guess that bakes into, like you said, operational models, financial models. Like if we can do these products or these activities digitally, then it frees us up to do these activities in person, right?
Yeah.
And does your role as in both product and strategy, is that kind of telling of what you do day to day in terms of we need to think in the weeds about the product, but also strategically, what's the strategic bet or where are we going from a direction?
Yeah, I mean,
standpoint?
I have to say I've done less and less product in my time at Allica. And I think it's to some extent because you kind of set that clear product strategy, and products and strategy clearly need to be massively aligned, right? So I would like to think that anybody in the product with the term product or design in their title would be able to give a pretty good account of what I just said, which is this kind of mass complexity problem. So in other words, I'd like to think it'll be very remiss of them, frankly, if they haven't picked up the fact that is our strategy, right? So I don't actually get involved in that much day-to-day product. Design still reports into me directly, and I do get involved in product design questions a bit. But the reality is that kind of product strategy, we're long beyond that being a debatable point. It's because we've very clearly shown that product strategy is right. In terms of our wider strategy, 100%, I'm still heavily involved in that. But my remit is quite wide. So, for example, I'm the accountable executive for marketing. So, to the extent we have a CMO, it's me, right? It just happens not to be in my job title. I've got quite a wide remit. I'm doing quite a lot of stuff on partnerships, which you can read as embedded finance at the moment. So yes, my role has evolved over time with the business.
Well, it's perfect, given this is a marketing compliance podcast, to go into a bit of the marketing side. Yeah. So yeah, I was on the tube today. I saw Allica Bank as one of your campaigns. So I'd be curious which campaigns maybe you're most proud of or most involved with, or that really shifted the dial.
Well, I mean, without doubt, the single thing that I'm most proud of, and be careful, right? It's like I'm involved in these things, but I have my team are the ones who make them happen. Is our bowler hat. So for those that don't know, our logo is a bowler hat, orange bowler hat. And for those non-Brits, a bowler hat. On, right? I have got it on. I've always got it on. So the bowler hat is a traditional symbol of banking. So if you, in the city where we are now, if you'd gone back 50 years, then all the bankers would have been walking around with a black bowler hat on. It's the hat you wore if you're a banker. Well, our orange bowler hat symbolises that we are how business banking used to be, i.e. relationship, human, etc., just better because we're different. Hence the orange, because they would not have been wearing an orange bowler hat, I can show you that. So the kind of chronology behind that one, we had a brand agency come up with it as a campaign creative, the orange bowler hat. And as always, there was lots of reticence about it for various reasons I won't go into. But long story short, it kind of felt like the right bet to take. So we ran it as a campaign, the orange bowler hat, a campaign called Get Your Money Hat On. And by the way, that campaign, a year later, won B2B Creative of the Year at the B2B Marketing Awards. This is a big awards, by the way. So our shortlist category was Samsung, Amazon, EY, and one of the other big ones, I think Accenture or something like that. I mean, this is the...
Yeah. How big were you when you won that award?
Tiny.
Yeah.
This is the Oscars of B2B marketing, right? And we won it. So it was a highly impactful piece of creative. So we ran it as a campaign, and we just kind of had... I didn't talk about it much with my head of marketing, but I just had a sense she'd reached the same conclusion as me, which is what we eventually came in with the phrase, we go all in on the hat. We had found something, right? We'd found something, a brand icon that was going to really land, right? About a year after that campaign, we basically rebranded around the orange hat as our logo, and a brand icon is the right way of putting it. And what's the logic behind a brand icon? Think red telephone, right? You can get a brand icon really settles in the mind. If one of our team walks into a client meeting and they haven't heard of Allica, but you're the orange bowler hat guys, right? So I'm very proud of that. The execution and the idea, by the way, I'm very proud of that. I'd say it's one of the better things that in my career I've been involved with. But yeah, you asked me about the tube adverts we have at the moment, the Allica Bank.
Yeah.
So I have to be really honest here. I didn't like those ads.
Okay.
I mean, one of the things I've noticed about myself and curtailed as I've got older and wiser is I do react badly to other people's ideas sometimes. So our head of brand showed those to me. I think it must have been 6 to 9 months ago. And I just completely poker faced it, right? And she obviously knows my modus operandi. She's like, "You don't like it, do you?" And I'm like, "No. I'm just thinking. I didn't like it at all. And I said, "Look, no, I'm not saying I don't like it. Just let me sleep on it, right? Because I just need time to think about it." Anyway, I slept on it. Woke up, I still didn't like it. But I didn't tell her that because one of the things we fight really hard against ourselves doing at Allica is what Jeff Bezos calls the hippo, the highest paid person's opinion. Now, in matters of brand and marketing, I'm the highest paid person, right? I was the hippo. So my views of the hippo didn't matter, is what I told myself. So I said, well, look, just go and get some other opinions. Don't worry about me. Yeah. Anyway, that campaign has been really successful. Yeah, really successful. Our tube advertising is just, every time someone comes to visit, they're like, "Oh, I saw you on the tube."
Yeah.
And it's amazing, actually. You get people from Manchester, from Leeds. It's amazing how many people come through the tube in their daily lives. So yes. Anyway, long story short, I've had tons of professional marketeers say, "I think that's a great campaign," and I just still don't get it. Yeah. So I was sitting next to. I was at a dinner, and I was sitting next to the a European regional head of marketing at Wallex, so like a $10 billion startup. She said, "Oh, that's a great campaign. It's amazing." I said, "Can you explain to me?"
Yeah. I think it's so, for me at least, it's so eye catching.
There you go.
You're kind of drawn in. But I like the messaging and the logic behind the bowler hat.
And that's the thing, right? So the bowler hat is a classic brand icon. So in other words, it doesn't matter. You can't remember the name Allica Bank, right? We're the orange bowler hat guys, right? But the Allica Bank, of course, is trying to go the next step, which is basically how do you get people to remember the name and actually pronounce the name right as well, which is a problem that we have.
And operationally, when we think about compliance, for example, or getting that campaign off the ground, if we focus on compliance, how early do you loop them in? How involved are they when you're going through those iterations of the promotion?
Yeah, well, look, this isn't a comment on my compliance, our compliance, but this is a general comment on compliance. Compliance tend to want two contradictory things. They want to be involved really early, but at the same time, then they'll be like, "Well, we don't have enough facts to actually make a decision," right? Well, that's a useless piece of feedback, right? It's chicken and egg. How we try and unpick that is the way to engage compliance early is basically, I'm not talking about a particular word in a campaign. I'm talking about the really big picture stuff, right? So, is this product going to be compliant, for example? I would expect our product people to go to compliance and basically say, we're thinking about something like this, right? What is the sort of things we should be thinking about, right? What you actually want compliance at that point is to sort of the long tail of things, types of regulations and stuff. You might have no idea about them. Just say this might just infringe on that. This might impact this, right? And I would expect the product person then go and do the reading. Yeah. Pre-ChatGPT, literally read the damn things. Post-ChatGPT, GPT maybe, summarize some key aspects of this for me. But the point is basically, I would expect our product people to ask the compliance team early for what are the sorts of things that are likely to be considerations here. Then go and do their own homework, right? Go and actually figure it out for yourself. And then later on, you're kind of like, okay, well, we think the product's going to look like this, right? These are kind of we've got a fairly grounded idea of what it's going to be, the product, the messaging, whatever it may be. Now, specifically, are you likely to object to this? Well, I can't give a definitive opinion because it's a bit vague, but probably not, right? So, and then the final sign-off should be basically a shoo-in. So it's really about almost kind of having a kind of a funnel for compliance, which is basically kind of, let's capture every possible thing that might impact this, then basically give me a reasonably grounded, then give me a definitive answer. It's almost like a marketing funnel, but for compliance. I think that's the way to think about it. What you can't have is people in compliance and related roles who basically just, they're so binary that they're kind of like, well, I can't give you an answer until you give me the definitive thing.
Yeah.
Well, what's the point of that? I think the incumbents are far too tolerant of people like that, right? You need to get rid of them.
I think the funnel, the way you see the funnel, is exactly how we approach product at Adclear. It's the same.
Yeah.
Get them in early, but get opinions, get feedback on things that let you move through the process quicker. Not just no, not doing this.
Yeah,
It's not binary. It's
and the
subjective.
nature of compliance. I mean, it's like I've read this morning. It's like 15,000 pages of the FCA handbook.
Yep.
And that makes you think, doesn't it? Makes you, if you're wondering what's wrong with this country. But the reality is, right, only a compliance professional is going to know, well, it might just impact those 10 pages.
Yeah, exactly.
That's the point. That's what compliance needs to be doing for you early, right? Because there's zero chance I'm going to sit down and read the entire 15,000 pages just in case there's something.
Yeah,
right?
or use AI to help you in those gaps.
Yeah. Albeit, I've done a couple of exactly this actually with AI recently, and I wouldn't say it hallucinates, but it's probably overconfident. Fortunately, clearly I was always going to parallel test.
Yeah.
But I was trying to educate myself so I didn't look stupid in front of somebody when I had the first conversation with compliance. And it's, I think that overconfidence rather than hallucination is problematic.
Any bits of advice you'd give a first-time founder starting a fintech company now?
Well, I think there's a number of things that have to be true for a startup to be successful and to be of any consequence. Firstly, is it a big market? Secondly, is it a broken market? I very often find people, particularly corporate backgrounds, they're kind of like, well, the market's enormous. It's $1 trillion, right? But that's irrelevant if the current $1 trillion of that market are pretty well served by incumbents, right? You haven't got a chance. Is it broken? Why now? So what's the inflection point? I said the inflection point for funding options was the global financial crisis. Why now? And then why you? Why? So let's take the leap of faith. You have the DNA of a founder. Even then, it still matters why you, right? So what particular knowledge or insight, unique knowledge or insight do you have, or execution capability do you have? So be very honest with yourself about that, right? There's quite a lot of sheep-like behavior. In other words, the latest cool thing is this, right? It's AI or it's stable coins, whatever it may be, right? The reality is that's a terrible way of answering the question, why you? Because that will become a real question, either for investors or frankly for your business. So my advice would be try and find that intersection between a big broken market and you and this point in time basically being the right thing for that right time.
It's a great way to end. Thank you so much, Conrad. Appreciate it.
Thank you.